Are you tired of playing it safe with your investments and ready to level up your portfolio? Or let's say you're so busy with your schedule and you just don't have time to manage your portfolio or the stocks that you're picking out. Well, look no further, because we're going to show you the top ETFs that even the savviest investors are keeping an eye on. First up is the JP Morgan Equity Premium Income ETF. This ETF offers a unique combination of income and growth potential, making it a great choice for those looking for balance of both. Welcome to the world of ETFs, where the possibilities are endless and the returns are through the roof. But before we dive into the top ETFs you should keep an eye on, and let's first talk about what ETFs are and why popular investors are investing in ETFs and why you should consider investing in an ETF. An ETF is an exchange-traded fund. It's a type of investment fund that is traded on the stock market exchange, just like stocks. It holds a basket of assets or companies, such as stocks, bonds, or commodities, and is designed to track the performance of a specific market index or sector. One of the biggest benefits of ETFs is they're diverse. Rather than buying an individual stock or bond, ETFs allow you to invest in a basket of companies or assets, providing that instant diversification for your portfolio. And it requires less time and effort for you to invest. And you don't have to constantly look at what the ETF's doing. Because they're traded on the stock market exchange, they are highly liquid and can be bought or sold at any time during the market hours. Now, let's talk about the top ETFs you should be adding to your portfolio. So at the time of this recording, currently JEPI, JP Morgan Equity Premium Income ETF, is currently trading at 55.09 after hours, as you can see, and the expense ratio is 0.35%, and it yields 11.68%. And when you look at the 1-year chart, it is down, but not that bad. When you look at the 5-year chart, it's still not down that bad. And when you look at the max, it's still not down that bad. And as you can see right here, the volume is continuously increasing. But what is the ETF holding? Well, let's go look at that. Here's the sectors it's weighing right here: basic materials, consumer cycle, financial services, consumer defense, healthcare, utilities. And their top 10 holdings, 24.05% of total assets. Intuit, Microsoft, and right now Intuit is going to probably shoot up like crazy because it's tax season. And then you have Google, DET Energy. Now, here's the top holdings, the top 10% in JP Morgan Equity Premium Income ETF. They're right here. You have Progressive, ExxonMobil, United Health, Coca-Cola, Hershey's, PepsiCo, aka Pepsi, Honeywell, Bristol Myers. And you can find all this on their website. All you have to do is go here and you can. But some of you might be asking, why do you keep mentioning this ETF? Well, here's why. Look at the dividend schedule. It is paying out 57 cents for holding a share. And before that, 61, 60, 48, 55, 49 or 50 if you want to round, 62, 51, 46. And that's every month. And the stock's not moving up and down that much. That's even more what a bank's giving you. Then we have SPHD, Invesco S&P 500 High Dividend Low Volatile ETF. I love this ETF because it doesn't move up and down that much, and it is trading under ticker SPHD. Now, when you look at their portfolio for this, here it is. You can look at their main website. I'll have all the links in the description below. The large cap value is at 39%. The large cap blend is at 8.93%. The mid cap value, 35.26%. The mid cap blend is 16.51%. Their top holdings are AT&T, Kinder Morgan, MO, GILD, Dow, Iron Mountain, Philip Morris International, and all these other ones. So all these companies just pay out dividends. And now let's look at how much dividends they pay out and when they pay it out. So as you can see, another ETF that pays out dividends every month. And they've been doing it pretty consistently. They've been giving out 0.14 cents. A lot of you might be saying, 14 cents is not that much. But think about it, every month. A bank doesn't even give you 14 cents in a year for having your money there. So one thing I want you to keep in mind when you're investing in these ETFs, and the one thing is, a penny doubled every day for a month. How much is that? Let me know in the comments below if you know the answer before looking at the answer. So the answer is 5,368,709.12 cents. That's how much a penny is doubled every day for a month. Now, that's how much it is, a penny every day doubled for a month. Now, imagine you constantly buy these ETFs every month. But I don't have enough money to invest. Fine. Let's say you have $10 every month. I know everyone at least has $10 that they can spare. You can buy fractional shares. And then you can constantly add to these positions. And let's say maybe 5 or 6 years, you can see your money being like this, compounding. And you reinvest every time you make your money. Do not take it out. Just keep reinvesting unless there's emergencies that happen. Then, take it out. But if you don't, just keep reinvesting. Now, that's how much it is, a penny every day doubled for a month. Now, imagine you constantly buy these ETFs every month. But I don't have enough money to invest. Fine. Let's say you have $10 every month. I know everyone at least has $10 that they can spare. You can buy fractional shares. And then you can constantly add to these positions. And let's say maybe 5 or 6 years, you can see your money being like this, compounding. And you reinvest every time you make your money. Do not take it out. Just keep reinvesting unless there's emergencies that happen. Then, take it out. But if you don't, just keep reinvesting. Next up, we have Schwab USD Dividend Equity ETF, SCHD. And as you can see, it's currently trading at 76.44. It pays a yield of 3.39%. Expense ratio is 0.06. Over the 1 year, it's pretty consistent. As you can see, it had this little drop, but that was in September 26th of 2022. And when you look at the 5-year chart, it's been going up consistently. But it's staying consistent right here, right? Why? Because there's a lot going on around the world. What is the current holdings for this ETF, you might be asking? It's basic materials, consumer cycles, 7%, financial services, 20%, consumer defense, 13.97%, healthcare, industrial, technology. It has Merck, all these other amazing companies, PepsiCo, BlackRock, Lockheed Martin, Verizon, Cisco, Pfizer, all these amazing companies that pay out dividends. And that's the amazing thing about ETFs is you're buying these ETFs, but they have a lot of companies within this ETF. Now, here's the performance of the ETF, SCHD. As you can see, going up consistently, which is a good thing for you and me and everyone else because I currently hold it. And like I told you earlier, my strategy is continuously adding, and every time it dips, I keep adding more. I wait for the dip. That's the key. If you wait for the dip, you're going to get the dividends, and you're going to get maybe 3 to 5 or 7% of when it goes down. So you're going to get that on top of it if you ever need to sell. So wait for the dip, buy, continuously add, and watch your income go up like crazy. Next, we have Energy Selected Sectors SPDR Fund. XLE is the ticker. The reason I picked this one is because I expect energy prices and gas prices to go up and increase. And how can I take advantage of that? Well, right here, this ETF. It yields 3.68%. Its expense ratio is high, 0.10%. Year to date, it is, pretty consistent to right here, June or May 30th, 2022. The 5-year chart, when you zoom out, it is increasing slowly. Now, if you were to buy it at this dip, you would have taken advantage of it. September 1st, 2020. Now, what are the top holdings? Exxon, Chevron, all the gas companies that we know of, Marathon. And last but not least, we have iShares US Oil and Gas Exploration and Production ETF. This ETF is set to go up with gas prices as it tracks the performance of companies involved in exploration and production of oil and natural gas. With the increasing demand for energy, this ETF is a great way to gain exposure for the energy sector. So when you go to their main website, iShares, here's the stock or the ETF, whatever you want to call it. It's currently trading at 97.52. Let's look at the performance and distribution. And as you can see, here's the performance. Hypothetically, if you had $10,000, here's what it would have been done. And if you bought here, that'll be a good spot. And you end up here, you're making a lot of money. And as the closing price is 97.54. Number of holdings, it has 48. PB ratio is 2.84. Trailing yield, the PE ratio is 15.37, which is really good. Now let's look at the fees, because we really want to see what the fees are. It's 0.39%, which is really, really high. So just keep that in mind. And if you scroll down, you can see all the holdings. And if you want to show more, you click here. And you can always go to their main website and check out all their holdings because it's a lot. So here's the dividend history for IEO. And as you can see, it's quarterly. And what do you notice here? They went from 57 to 1.223 to 1.36. They did go down a little bit, but you're getting paid every quarter for this, just holding this. And we're expecting for oil and gas prices to go up. And then the last ETF we have for this video is EPI, Wisdom Tree India Earnings Fund. And it's currently trading at 32.57. It does yield a nice 6.02%. Expense ratio is high, 0.84%. The 1-year chart is down a little bit. Year to date, it's down a lot. The 5-year chart, it's showing that it's, up, but not by much. And then the max chart, it's down a little bit from its highs, but I think it will continue to grow up. The top holdings are right here to the right. Housing Development Finance, Infosystems, Reliance, Tatia, Power Grid. And then when you go to holdings, you can also see it on here. Historical data, We want to search for dividends only, apply. It has paid out dividends in March 25, 0.11 cents. In June 24th of 2022, 1.847 in dividends.